Hey everybody, economic ninja. Let me try that again. Hey everybody, economic ninja here. I hope you're doing great. Just woke up, literally just rolled out of bed super early. The sun hasn't even come up yet, but I wanted to thank you for being here. And the reason why we're going to talk about mortgages, we're going to talk about real estate and why banks are so desperate to make loans that they're loosening their standards. All right. Now, we've talked about how California has given people 20% down payments just to get into a house, zero interest, deferred payments for literally forever until they sell their house. Now, at that point, California literally owns 20% of the home, so they get 20% of, they get the down payment back and 20% of the, the profit. Literally just woke up. But you can start seeing where people are getting desperate. Governments are getting desperate and banks are getting desperate. We're seeing banks that are out there starting to do loans that are a little, let's say, unsavory if you're a Bill and Ted's fan. And right now, Rocket Mortgage has a new product out that will literally let you put as little as 1% down on a home. Now, we know there's all these fees, right? We've seen the federal government come out just recently and say, because this is, Joe Borgen's or Jeff Borgen's plan. I don't know who the president is. That guy literally come out with this plan saying, hey, we're going to take care of you if you have poor credit, and we're going to fine you if you have good credit, right? If you plan on putting down a big down payment, we're gonna tack on some extra fees. But if you don't have a lot of money, we're going to help you out. We're going to make sure you get into that house. Why? Because they need the dumb money. And I'm going to be honest here. This is honest, all right? If you got a bad credit score, it's because you did bad things in the past. You weren't that great with credit, or there are the rare instances where people have poor credit scores because they've literally never used credit. Now that I give you so much credit for, okay, honestly. But when people have bad credit due to things that they just went and borrowed money that they shouldn't have because they couldn't afford it, right? They got fooled into it, or they knew what they were doing, right? I actually know people that have gotten loans literally telling me that they plan on not paying the loan. They plan on going bankrupt. I'm not joking. They deserve where they're at when it comes to not being able to access capital in the future, right? But we're literally seeing governments and banks doing things to lead people that are foolish into buying a house. That's what happens at the very end. The exact same thing happened in 2005 to 2007. And I want you to be warned, that is when you know you're at the top of a market and things are hurting, because they have to keep juicing the markets to get people to buy so that they can keep making money. But on the back end, all they want to do is repossess those homes from you and then become the landlord, the greatest landlord on earth, literally. That is why it's so important for you to be out of debt, or getting out of debt, or have some cash on the side, have a good credit score, and get ready for this crash so that you are buying up all the assets alongside of the government and the banks, because it is so very vital. And it's part of keeping our sovereignty that we're talking about. And that's what I teach in the real estate course. If you want, I'll put a link down below. But check this out. Rocket Mortgage addresses affordability challenges with new 1% down home loan program. It says One Plus offers an executive affordable home loan, executive. It's not for executives, exclusive. It offers an exclusive affordable home loan option with mortgage insurance at no cost to the home buyer. Now, you like that mortgage insurance? We offer it with mortgage insurance. No, you are forced to pay for mortgage insurance because they know that more than likely you are going to default. If you don't have more than 1% to put down on a house, you are a prime candidate for default, all right? Now, I do go into the course how I would put down way less than the minimum on purpose for a strategic reason, and how I would cash flow more and then flip. It was a whole thing. But by and large, we're talking about people that are buying homes that they want to live in, right? Achieve the quote unquote American dream. The sad thing is they're going to also get the American reality when it comes to the foreclosure side. So that's why you are forced to pay mortgage insurance. So you got to love how they say, we're offering it with mortgage insurance. It's a scam. Potentially, it says, saving more than 90 million Americans thousands of dollars. Okay, now there's another fallacy, because not only are you paying for mortgage insurance, you're going to be paying a higher rate, okay? They are literally lying to you. They are not going to save you thousands of dollars. You are thinking they're trying to get you fooled by, ooh, the payment's going to be this, where it could be this, and you're going to save thousands of dollars in payments. You're not. You're literally, it is a trap. You are literally going to save nothing. You are going to spend tens of thousands, even hundreds of thousands of dollars more with products like this. All right, want to make that very clear. It says right here, Rocket Mortgage, the nation's largest retail home lender and part of Rocket Companies, today announced OnePlus, a new 1% down home loan program that will dramatically increase access to home ownership for millions of low to moderate income earning Americans. With OnePlus, a home buyer is only required to make a down payment of 1% of the purchase price, and Rocket Mortgage will cover the remaining 2% needed to reach the required threshold for conventional loans. Now, what is that telling you? If they're going to cover it, that's telling you that they are not making mortgages, that they are needing money bad, okay? So that right there is called, in the business world, a customer acquisition cost. And again, we're talking about the largest home lender in the nation. This isn't like a joke. This isn't like, a fly-by-night mortgage company that's going to end up going out of business tomorrow. You're talking about the big boys, okay? That they're hurting. All right, it says, in addition to reducing upfront cost, OnePlus completely eliminates the expensive monthly mortgage insurance fee for the client, which is traditionally required if buyers place less than 20% down on their purchase. Let me explain that again. When companies come out with these products and they say, we're going to cover your mortgage insurance, I'm telling you right now, if you were to price that product, that mortgage product, and guys, everyone in the loan industry, the mortgage industry, please chime in right now and let them know what I'm talking about. When they go and say, we're going to pay for it for you, and you think, whoa, that is amazing. They're self-insuring. They're going to get it on the back end, meaning that they're going to make that rate a little bit more, knowing that you are going to pay X amount of payments, right? And then because they're identifying you as, they're going to look at your credit score and they're going to go, okay, how much risk do we have? Is this the type of person that's only going to make 90 days worth of payments and then quit? Or is this the type of person that's more than likely to make 2 years worth of payments and then possibly quit? They're going to tack that rate up to a point to where they get their money. And as a matter of fact, in most cases, the rate's just high enough to where you stay, or just high enough yet low enough in this interest rate environment, they know that you're going to stay in that rate for so long that they're going to make lots more money on you. All right. So that rate, if you were to go out like immediately, and this is what I teach in the course, one of the lessons is you have to get multiple loan estimates, right? On the same day, you go out, you take the same exact information, same loan product that you desire to get, whether it be a 30-year fix, 15-year fix, heaven forbid, it's an adjustable rate mortgage. But you literally go out and you go to 3 or 4 lenders and you go and get their prices. You'll see that this price will be just a little bit higher, more than likely, than the others on that same exact day, okay? So you are going to pay for this on the back end. Now it says Rocket Mortgage prides itself on finding innovative solutions and lending programs that help clients achieve their goals in any market cycle. No lender has a mortgage option that makes affordable home ownership possible for as many Americans as OnePlus, said Bob Walters, CEO of Rocket Mortgage. We talk with people from all walks of life every single day, many of whom are ready to own a home and could easily make the monthly mortgage payments, but are having trouble saving a down payment. Let me stop right there and say, how many of you have went for a home loan only to find that when you go and apply for the loan, let's say you're looking for a house that's $500,000, they go, you're qualified for $700,000. You're like, are you kidding me? I've done my own math. I can't afford that payment. It just seems like they're always letting you know, no, you could afford it. So what? It's half your income. You could totally afford it. It's half. That means you have the other half. Yeah, the other half that you need to survive on, pay and maintain your cars, put food on the table, take your kids to Little League, things like that. Like, no way I could afford it. Your mortgage should be no less or no more than 1/3 of your take home. And the reason why is in a real world, and I know it's not possible right now. I get it. The bubble is already there. We're popping. We're going down. And you need to see that. But this exact same stuff happened back in 2006. We are crashing. This is proof. When the largest lender needs to go out and say, hey, we're going to pay part of your down payment, and hey, we're going to pay your insurance. They're just self-insuring, and they know that Daddy Fed is going to backstop them because there's a plan. They want to take all of the homes. That's why BlackRock is out there right now trying to buy up or sorry, start this massive fund, and they call it the downturn fund, $30 billion, getting ready to take your home when you can afford it. Guys, these are very serious times and we need to be prepared, but you have to see the signs. And this is very easy. I lived through this back in 2006. I sold all my homes by mid 2006. Hunkered down. I only kept 3 properties through 2008. And I am so grateful that I saw those signs. And now I'm trying to teach people how to see them as well. Hope you got something out of this. I hope you guys have a great day. The Economic Ninja is out.